Okay, this is a brief video on one of the stocks that I own a small position in, and I'm building slowly, Interactive Brokers. So I left my job with a government regulator in January, and prior to that, I couldn't invest in this because it was somebody that we regulated. But I've always been impressed with them, and if I had invested, it's up almost 500% in the past 5 years. But I think it still has more room to run. So if you look at margin rates, Robinhood actually has the best one, and I'll have a link in the description where you can sign up for this, and they'll give you something, and I'll get a commission. But the second best margin is Interactive Brokers, which is pretty close. Merrill charges me like 9 or 10%, and Schwab charges me 12%, which is outrageous. So that's why I opened up something in Robinhood, but Interactive Brokers has more robust tools, and you can trade a lot more international things and small cap things, which you can't trade on Robinhood. And a lot of professional traders use it. So this is how my account has performed over the past year, slightly less than the S&P 500. But if you look at 3-year performance, I'm beating the S&P by a lot, and ditto for 5 years, 116% versus the S&P and 181 for me. Go me. But I have a friend who is a money manager, and he has several individual accounts he manages for people, and he's trying to get enough customers that he can open up a fund. So I gave him some of my money to manage. And even though I'm comfortable doing it myself, I trust him and I wanted to help him out. And he uses Interactive Brokers because of the robustness of the tools and low margin. And he's not the only one. This is very popular with hedge funds for other reasons. And I actually interviewed with Interactive Brokers. I've interviewed with 8 banks, and this was one of them. And Interactive Brokers and another company called Alpaca are very popular with hedge funds because you can do API-based trading, which you can't do on things like Merrill. So if you are good at computer programming and you want to run certain algorithms to have it trade for you rather than entering trades by hand or monitoring things by hand, you can sort of set up an algorithmic trading thing with Interactive Brokers or Alpaca or some of the other specialty ones. And Interactive Brokers has a good enough platform, and they're very efficient that some of the other smaller brokers actually use their trading platform, and they pay them a fee. It's called the white label. And I've mentioned before that your default should always be to just invest in a low-cost index fund that invests in the S&P. And the S&P 500 is usually around 15 or 16, and it's quite high now. It's 31, but this should be your default, and anything that you invest in should be a better deal than this. And if we look at the PE, it's 38 almost. So it's trading higher than the S&P 500 index, which is capitalization weighted and includes things like Tesla, which is trading at 300 times earnings, and Palantir, which is like 800 times earnings, but 31 for the index as a whole. And this is trading higher than that. So if you think this is a good investment, it should be a lot better than what's in the index. And I think it's good enough that, sure, I'm willing to build a position in the common, and also I have some options in this. And as I said, I've liked this for years, and it's kind of frustrating to see it go up 5x in 5 years and know that I could have had a piece of that, but I wasn't allowed to because of my job. But, hopefully we'll make up for that now. So if we look at the statistics, their operating margin is 75% almost. It's like a software company. That's how profitable it is. And the return on equity is 22%. And they run a very efficient ship. So even though they're charging less than 6% interest on margin loans, and others like Tasty Trade are charging 10.5, and Schwab is charging me 12, they're still very profitable. So they borrow money at a certain rate, they lend it to their traders, hedge funds, things like that. And because they are so efficient, they can have such low overhead, everything is automated, they can lend out the money for a lot less than their competitors and still make more money than their competitors. And this attracts more hedge funds, more big traders, and their software and computer programmers and overhead are a certain amount. But as more business comes in, then that cost as a percentage of what they have to pay out gets smaller and smaller, which makes them even more profitable, which makes them able to charge less, which attracts more traders, and it sort of becomes this self-reinforcing loop. And again, the big attraction for hedge funds and stuff like that is not only the lower margin rates, because you can get a lower margin rate with Robinhood, but with interactive brokers, they have this API-based trading where you can run algorithmic trading on their platform if you have somebody in-house who's good at computer programming and stuff like that. And that's something that you can't get on many of the other platforms like Robinhood or Merrill Lynch or anything like that. And as I said, because of that, they have this incredible profitability. And so I think even though it looks a little pricey, if you're a value guy, paying 38 times earnings for something seems high, but compared to the future growth, because 5 years from now, do you think people will be doing more trading online or less? And during the pandemic, people trapped at home discovered the market, and the market's doing really well, which encourages people to invest more. And sooner or later, there will be a big correction, which there always is, and maybe some of the weak hands will get shaken out. But this one has been around for a while, and a lot of professionals use it, as I said. And so I think the owner, who is still on the board and he's semi-retired and in his 80s, but a genius, he's still around and owns a majority of the company. So his interests are aligned with yours. I think it'll do really well. So that's my thoughts on this. And this isn't a recommendation to buy or sell. This is just me walking through my process and what I saw in this and why I have a small position. And I'd rather have a small position and just periodically add to it on the dips or when I have some extra cash than go all in and then have a big downturn. But again, yeah, do your own research. This is what I like about it. If you have different ideas, just leave them in the comments. And if you have something you'd like to see, just mention it. I was going to do a video on FICO, which was down like 10% yesterday. If that's one you'd like to see, leave a comment. If not, I'm looking at different things. But yeah, love to hear your thoughts. So like and subscribe. As I said, there's a Robinhood link in the description if you want to sign up through there, and it has lower margin rates than even interactive brokers. And there's a buy me a coffee link if you want to support the channel, but don't feel like you have to. And love to hear your thoughts in the comments. What are you guys buying? What are you guys selling? What do you think of interactive brokers? Let me know. Talk soon, everyone.